Hello everyone, great to have your company on Kalkine TV. I'm James Preston and you're watching the Buzzing Trends, and in this edition we take a look at 3 ASX-listed blue chip dividend shares for this week, namely BHP Group, Coles and also Seek. Let's start with BHP, which is a global resources company with key operations as an iron ore miner and an oil player. The shares of the ASX 200's second largest constituent by market capitalisation have been under pressure since the middle of August on account of a steep fall in the price of iron ore. BHP has, however, been making moves to become greener in recent times. It's now planning to divest its oil business to Woodside Petroleum. The company has talked about its plans to reduce its Scope 3 emissions, namely emissions caused by its customers. There is also early speculation that BHP is considering selling its coal business. The current high coal prices have given plenty of food for thought for BHP, given the high profit generation from coal in the recent months. Since hitting record highs in early August, BHP shares are now down by around 30% from the all-time high levels. At the current share price, the company is down 11.4% in 2021 so far. However, oil prices have touched their multi-year highs in the recent weeks due to an increase in demand. As a result, this has offset some of the losses due to iron ore's decline. BHP's profit from operations increased by 80% in the 2021 financial year, and investors looking for opportunities in fundamentally strong but beaten down stocks can certainly look at BHP Group as an option. Based on the current price of $38.23, BHP stock has a yield of 10.31. Let's now move on to ASX-listed supermarket retailer Coles. The supermarket giant enjoys a strong position in the sector in addition to an attractive valuation compared to rival Woolworths. Since J.G. Coles opened his first store in Collingwood, Victoria back in 1914, Coles has gone on to become one of Australia's most recognisable brands and one of the big two players in the supermarket industry, with a network of over 800 locations across the country. In addition to this, Coles has an equally large liquor store and express store network. This gives the company extraordinary defensive qualities, which have been on display for all to see during the pandemic. Based on Coles' current share price of $17.75, the company has a yield of 3.4% for investors. In the 2021 financial year, the company delivered a 3.1% rise in sales and a 7.5% surge in net profit after tax. The company's management expects enough growth potential moving forward, and it also sees scope for its online business. Based on these two factors, the company is expected to announce a solid earnings and dividend growth throughout the duration of the 2020s. Time now for a very short break before we take a look at our final blue chip dividend stock portfolio for consideration on the Buzzing Trends. Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV. Thanks for your company on Kalkine TV. I'm James Preston and this is the Buzzing Trends program live from Sydney, and we're taking a look at blue chip dividend yielding stocks. Let's wrap things up with a focus on Seek. Seek is an Australian-based operator of online employment classifieds, education and training. Thanks to its leadership position in the ANZ market and a rebound in listing volumes, Seek delivered a strong result in 2021. The company reported a record EBITDA, up 15% from the prior corresponding period in its 2021 full-year results. The revenue also rose by 1% through continued operations. The company is expected to do well as COVID-19 restrictions are being lifted gradually across the country. And based on SEEK's current share price of $32.70, the company has a yield of 0.61% for investors. Another interesting piece of news for investors is that SEEK's investment in Hibob has more than tripled in value in less than a year. The Israeli HR tech company announced overnight in the US that it had closed a $150 million Series C capital raise led by General Atlantic, which is expected to value the business at around $1.65 billion US dollars. This is a substantial uplift on its $500 million US dollar evaluation in December last year, when SEEK co-led the company's $70 million Series B raise alongside Israel Growth Partners. Alright, well that's all for this edition of The Buzzing Trends. I hope you enjoyed the show. Stay tuned to Kalkine TV for the latest market updates, business news and exclusive expert interviews. I'm James Preston, signing off for now.